Per usual, everything else channeled for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about dip buying principles in a bull market. Now, I've talked about this previously in 3 other videos. I will link these videos in the description of this video. These videos were basically not exactly in the same types of conditions, but the same types of principles can be used in the current format. You always want to have some sort of framework when you are assessing to get back in the market or to buy things that are going the other way. The number one thing you're always looking for is emotion, capitulation, washout, stop loss hunt, just huge open interest, wipeout, huge volume, huge wick, low time frame, high time frame, whatever it is. Always, always, always looking for that. That is a very good sign that you're hitting exhaustion. So there's nothing more bearish than a slow bleed. It's one of the reasons I'm perma-bearish on Zcash. I've been bearish on ETH-BTC for years. That is just slow bleed personified in a chart forever and ever and ever. So you're always looking for huge volumes, ideally. This being a holiday week, we could just be seeing low liquidity. We could be seeing volumes getting pulled back on the bid side. Clearly, we're seeing profit taking, and it just kind of is what it is, right? You don't go up forever without coming back down. But if you have a general idea of what to look for, then no matter what you're trading, any market, crypto or otherwise, you can have some sense of the idea of what's going on. Because I know for a fact there are people trapped in MSTU and whatever else on options since last week, and there were signs. There were signs, and I talked about it Sunday. This isn't like me backpatting or congratulating myself. If you see this stuff over and over and over again, and you have a framework and you say, okay, is now the time for leverage, yes or no? Sunday was clearly a no on the long side for me. And I said that in the video. So if you're curious what I was talking about, go back and watch the Sunday video. So now the question on the downside is, when do you want to deploy some of this, if at all? Like I said on Sunday, I'm fine with eating drawdown in BTC and the 1x in the benchmark. I'm not okay with sitting in 2x or 4x leveraged positions because frankly, I know better. I mean, come on, right? Like, it's not hard to look at the chart and say, wow, we are pretty far above the key June or whatever you're using for your mean reversion identifier. This is just math. Again, you can talk about anything you want regarding everything else that is not math. I will agree with you. That's not what this is about. You have to separate SPR, Trump, liquidity, all this stuff. That's fundamentals. That's macro. That's right. That's other stuff. This is just math. This is just probabilities. People are generally very bad with probabilities. I mean, go read the comments on Sunday's video. People were in disbelief that we could pull back. Okay, well, here you are. Right? Like, I don't know what else to say. But anyway, this is the distance from the key June. So if you're wondering, okay, how can we maybe identify probabilities of a pullback? The higher you get from mean reversion and stall out, the less likely the probability of bullish continuation, right? Outside of funding, outside of ETF inflows, it's just looking at distance from the mean reversion possibility. Sunday I also mentioned this inverted cup and handle. At that time, it was 2 things. It was potentially this versus a inverse head and shoulders, shoulder head, potential shoulder. You can see we even attempted that on the low time frames. We never really broke the horizontal on the hourly, and we went back into the cloud. So that was the answer. The answer was at 96 that it was pretty likely we were going to see further lows. And here we are now at 91.2, even lower than this chart. We do have a div on the hourly. The question is, can that hold? We will see. We will see. But it's definitely something to watch to the downside. We can also look at the pitchfork here, which we had talked about. And I think it's important to see this throughout the whole process in action, pre-breakout, post-breakout, hitting the target, pulling back, right? I don't care what anyone else does with their own book. That's not what this channel is about. I'm just telling you what I'm doing. And I'm telling you, when we get to certain levels based on math, that's where I'm concerned, and we have sensitivities in price, right? So we were just as overbought as we were in March. Okay, we're pulling back. Great, awesome, excellent. What's the next thing to look for? We can also turn on VRVP, volume of the visible range, effectively. And there is some support lower here. This is the index. This is not a specific exchange. You can use either one, whatever you prefer. I prefer the index, but there is some support below 89.5, but it gets thin super quick into the 80s, into the high 70s. And really, we don't get support again until 77. And knowing what we know about Saylor and where he rebought that may be a little concerning. If Sailor was the sole reason from mid-November to the 24th that we went from 90 to 98, is he going to come back in? Is the question, because it certainly doesn't look like anyone else is at the moment. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Period Ventures Inc., PVI, DBA, Kraken. So on a live chart here on Kraken, one of the reasons I really like RSI just minimally on the daily is looking for divs specifically. Divs are less important when we are ranging, more important when we are at the top of the range or the bottom of the range. We had some bull divs, July, August, September with another bull div, lower low in price, higher low in RSI. And then from there, we really haven't had easily identifiable divs until recently, where we had a bear div. You got a higher high here, lower high in RSI. That just means momentum is waning. We also had that on volume. So the ultimate mean reversion level on Kraken is 79.4. Again, this is about probabilities. Do I think we're going to 79.4? I don't think so. I don't think we have the momentum that's necessary. But if you're trying to think of a time when we have low liquidity and things happen and, you can make things up. But if you're telling me it's impossible to stab to 79.4, I don't think it's impossible. But again, this is about probabilities. So if you think that's a decent probability, you're just waiting. You're just waiting to see volume, emotion, whatever on the daily, some sort of wick, some sort of rejection of bearish continuation, effectively, anything like that. I was also looking at RSI here on this trend channel. It's possible we find support on RSI on the trend channel here. You can always apply TA to anything, including RSI, right? And so the first thing is, do we bounce here? Yes, no. The second thing here is, if we don't bounce, do we then get a hidden bullish divergence, which would be a higher low in price from 67 and then a lower low in RSI? We saw plenty of those in 2017 where you'd get significant attempts at momentum to the downside, but you would be unable to break previous lows. So that's the next thing to watch for if we continue to break down. But on low time frames using the cloud, this is probably one of the most concerning things for the near term. Is we are set to trigger a bearish 4-hour edge to edge, which would be 83 to 87. Again, this is about probabilities. This is not about absolutes. The cloud is telling us this is a possibility. Currently, we are on the trajectory for that possibility. And the next thing you're going to ask me is, okay, what's the hit rate? What's the back testing? And you can just do that real quick. Look at any time we were in the 4-hour. Here was one such example. Generally has a pretty high hit rate. Okay. And you can look at multiple examples across multiple years, et cetera, et cetera. So using that as your knowledge, I do like bids in this region. And we already know that VPVR is thin in that area. If we turn on VPVR for Kraken, you can see there's a bite in volume here. So it wouldn't be unrealistic to perhaps wick to 83 on a panic dump and then wick back to 88 or something like that. But this is less about the exact moves here and more just about what I'm looking at when I'm looking for potential moves lower and levels I'd be comfortable with. And ideally, you can do this with anything. You have some framework, and then you're looking across anything you want and saying, okay, what does Sol look like? Well, Sol has more support at the bottom of the cloud here in the 4-hour. That would be 210 to 218. Done, right? I don't think about it any more than that. That just is what it is. For ETH has not triggered the 4-hour edge to edge yet, but ETH has kind of its own issue here. We have seen this before. This would be some sort of broadening wedge, and we can measure this. We can say, okay, that measures to roughly 3,000, roughly an edge to edge potential. Again, maybe we get a wick down there, maybe we don't. I like 31. So if 31 is a higher probability than 3K, what you could do is start layering some bids on the way down, right? That way, if it wicks, great, you hit it. If it doesn't, great, you at least got in at 31. And then you can layer these on a percentage basis however you want. You can start with 25 to 50% on the first level and then descending levels, right? You can ladder this. But if you're not sure and think we're going down and you have some cash, this is one way to do that. So far here, ETH looks okay. Let's do a couple more examples. Doge 4 hour, same thing. 30 cents would roughly be the level. Volume on the meme coins is going to be kind of all over the place. On the daily level, that would be 29 cents for the mean reversion. So I always have a maximum level that I'm looking for based on the Kijun. And then if we've moved up quickly, there's almost certainly going to be something on the 4 hour, 6 hour, 8 hour that you can watch. 4 levels on the downside on the cloud. I use the cloud because I don't see it necessary to use much else, because it does give you a lot of information. Looking at something like MSTR on the legacy side, using the correct cloud settings, 335 was the level, and that was the level a couple days ago. So MSTR is technically getting closer to the wheelhouse of expectations, but MSTR has its own idiosyncratic special things that are going on here that are slightly different. Nevertheless, the TA still applies. Daily levels 335. The 4 hour isn't super helpful because again, you're breaking those levels already, right? The level was 375. Okay, now what? There's really no support lower. I mean, you can go to the hourly, but the hourly was telling you to get out at 400 and not telling you to get back in yet. So on the leveraged instruments, you have to give yourself a little bit of leeway in either direction because they do tend to overshoot and undershoot. But this is the first stop for MSTR. If not here, then the downside is certainly considerable, potentially. We can add the pitchfork to this. We can look at levels. There's a level at 269, and ultimately the midline of the pitchfork is 226. That would where I would be most comfortable getting back into a position. Do I think we are going to go there? I don't know, right? This is about probabilities. So you could say, all right, I like a little bit at 269. I like a lot at 226. Heck, I like a little bit at 325 maybe. And that's how you play the game. But again, we're in a low liquidity week. Potentially things could get squirrely in either direction. Is this sailor tapping the ATM? Could be. But other than that 335 level, there's not much else here on MSTR. I guess we could look at the volume profile. I don't think this is going to be super helpful because it's probably going to be all over the place. But this is the first stop. 335 was the highest volume area down to like 250. So if it doesn't stop here, volume would suggest 250. And then one more here if we're looking at BITX, which is the 2x BTC ETF, starting with the daily, with the cloud. Daily cloud is 44. And this is never something I'm like guessing, right? I just instantly, you know where it is. Boom. Next question, right? It's not like, is it 40? Is it 45? No, it's 44.24. That's the level. And you can see on the daily, there's more volume below 40. If we go to the 4 hour and pop on the cloud, that level is at 47. So no matter what you're looking at, you got to have some framework for overbought, oversold, breakout, bullish continuation, bearish continuation, bullish exhaustion, bearish exhaustion. We're always looking for emotion in these cases. We're always looking for the same chart patterns, Adam and Eve, W to bottom, inverted head and shoulders. We're always looking for a dragonfly on the candlesticks, a tweezer bottom, a bullish engulfing. We haven't seen any of that yet. We're still sort of stair-stepping our way lower, lower, lower into the daily close. That's all I have for this one today. Like, dislike, comment, share, subscribe, and happy trading.